Hello, everybody. Good morning, good afternoon, and good evening, wherever you are in the world. And thank you for joining us on our Panax webinar. We are going to be talking about survival tips for lean finance teams with complex treasury needs. And I'm very excited to introduce you to our three experts on lean finance teams and on complex treasury. We have Tracey Knight, we have Eugene Spevakov, and we have Yaar, who is part of my team here at Panax. Just a couple of housekeeping tips before we get started. This is being recorded, so you'll be able to watch it back afterwards or send it to other people in your team. We have a Q&A button if you'd like to ask any questions, and we're going to be running a couple of polls, and we would love your participation in the polls because it helps to keep things interesting and to give us more information about what you're interested in. I'm going to set the polls live now, and you should be able to see them at the side of your screen. Okay, and I'm just going to pass over to our three experts just to give a quick introduction to themselves. Tracey, would you like to kick us off?
Hi, thank you. I'm Tracey Ferguson Knight, and I am so happy to be here today. I started off as a practitioner way back in the 90s as a treasury practitioner, and I loved using my TMS so much that when I decided to leave that company, I went to a TMS vendor. And over the years, I've worked on the vendor side in sales and implementation and client success, and literally have done thousands of demos. More recently, I've started my own consulting practice with a partner called Real Treasury, and we specialize in treasury consulting and technology selection. Happy to be here with you today.
And Eugene, over to you.
Hi, everybody. My name is Eugene Spevakov. Super excited to be here today. Thank you so much for having me on the panel. Definitely look forward to our discussion. I have over 15 years of treasury experience, predominantly at public established companies, AT&T, SanDisk, and most recently Infineon, a couple of other semiconductor companies in between there. Most recently, though, I was a treasurer at a company called 6 Sense. 6 Sense is a VC-backed late-stage Series E private company, and they operate in RevTech space. They're B2B SaaS company. Right now, I'm doing something completely different. I'm actually taking a break of stepping away from being an insider practitioner inside a company. And I see this tremendous value that Treasury has to offer to pretty much any company out there. And I think most folks on the panel and in the audience would agree with that statement. I also see that companies without a dedicated Treasury team, or maybe with extremely lean Treasury teams, just don't have the ability to fully tap into those benefits that Treasury has to offer. So I'm trying to change that. I'm building a treasury consulting practice focused more on the people and process side rather than systems. And my goal is to bring those benefits that Treasury has to offer to the companies that do not have the bandwidth or the staff to fully utilize it in-house, at least to get all the basic stuff. And there's a lot of opportunity to save money and reduce risk. So if you want to put another way, I'm democratizing access to treasury benefits for every company out there. It shouldn't be just for the big companies. Thank you.
Yes, thank you. And Niv, over to you.
Yeah, thanks, Naomi, and hi, everyone. My name is Niv. I'm the Chief Business Officer of Panax, also leading our US office. In my background, mainly finance and business. I'm a CPA, dealt with financial consulting and financial modeling for a few years in EY. Also worked on a private equity investment team where I first saw lean finance teams manage or stressed by managing cash. Usually when a private equity comes in, so we could put debt inside, suck up some cash, and it really like stress things up. And then I went to start Panax together with two co-founders, and what we do is cash management for lean teams with complex treasury needs. We can either come as a third solution in place with all the connectivity aspects of it, or to be a layer on top of a legacy system, where we also see teams just struggling with really automate cash management. So we do both positions. Yeah, today we're about 40 people, and happy to be here and speak with you all.
Brilliant, thank you. So we're here to talk about the stresses and the struggles and the challenges, but also the opportunities facing lean finance teams as we go into 2025. And you know, a lot of people are talking about efficiency and saving resources and kind of how you can work more efficiently and how you can make sure that you're having less errors. And one of the big ways that the companies looking to do that is to automate processes and to bring in more systems and more automation. Tracey, I'm going to start with you. What would you say in terms of timing? When is the right time for companies to be looking into automation for their finance teams?
Yeah, I think ideally as soon as you start to become a little more complex. And by that, I mean when you start to add on more. That's more banks, more accounts, more entities, more currencies. Maybe you're starting to work globally and just dealing with a lot of different processes and people. As you begin to add on more, your spreadsheets start to become more and more complex, and you do lots more repetitive kinds of tasks, just as simple as even just logging into different bank portals. And so that's the ideal time to bring in technology, not once you've become overwhelmed by it all, but ideally before you get overwhelmed in order to not become overwhelmed by the work and can focus on the things that matter as opposed to just kind of daily tasks.
Okay, brilliant. And Eugene, what are your thoughts on this?
Yeah, no, I definitely agree with Tracey. You have to be proactive. You don't want to wait till things just start breaking and cracks appear everywhere and you're playing catch up. But the actual timing, you know, it's going to vary for every company. If I think about it, I can probably identify 3 criteria that affect the timing of it or when you should start thinking about it. The first one, exactly what Tracey mentioned, the complexity. Right, there companies at different stages have different complexity of their treasury operations. It could be their international footprint. It could be the number of legal entities. It could be, you know, how complex their foreign exchange needs are, whether they have debt, investments, et cetera, right? The second one is what is actually required of treasury, right? There are different requirements for different companies. For example, if you are PE-backed company, as Niv mentioned earlier, where you load up on debt and all the cash is sucked out, the cash flow forecast becomes very, very important. So there's a lot more requirement of treasury to deliver accurate cash forecast. If you're a VC-backed company, then maybe you're funded with a lot of cash. Maybe cash flow forecast is not as critical as it is for cash lean team. That's just one example. The other one, sometimes it's just the requirements of your leadership team. Some companies want to see a dashboard for everything, and they want it every single day, and it becomes very repetitive, right? And some companies, the CFO or the leadership team is not as keen on getting a lot of the reports. So the reporting requirements make a big difference. And the last one I'd say is the overall maturity of the tech stack within the company and specifically within finance. If you have a lot of other priorities, treasury will probably fall lower, right? You need to make sure you have a CRM, if you're focused on sales, or if you don't have a robust ERP, maybe you should start there. So it really depends on what other priorities exist. But if you can prioritize treasury, the treasury is required to do a lot of things and it's complex. You better start thinking about automation quickly.
Right. Brilliant.
Yeah, I mean, just to add on that and maybe to gather everything together, I think that there's a soft trigger when you also feel like you're losing control and losing track, and you start getting surprised by different cash events. So not to be prepared in one of my entities with the right currency at the right time, and just like in the last moment to panically move money, or the other way around. If I realize that I have excess cash that I haven't invested for 2 weeks, and I just now realized that I can do that. So it's also it's both in the operational risk aspect and the optimization wise.
Right. So ideally, companies want to get there before they start having these kind of cash weeks. They want to be there a little bit organized, but the reality is that sometimes they're not. Like sometimes we get there and we're like, oh my gosh, this is terrible. And then you bring in the technology to try and save the day, which brings me on to my next question, which is what obstacles do finance teams face when they want to start automating processes or when they want to buy software to help them to work more efficiently? And Tracey, I'll return to you on this one.
Sure. When it comes to implementation, I think one of the biggest obstacles companies face is time, that they often don't devote enough time to the project to get it done quickly and efficiently. Oftentimes, of course, that's because they've got their regular job to do, and it's not always easy to do that and something else at the same time, particularly for lean teams. So one of the recommendations I often give is to backfill behind the regular job so that you can free up someone's time to work on the system and the technology. I think one of the common mistakes is to bring in extra help and let that extra help do the implementation. And all of the knowledge goes with that person. So that's why instead I recommend backfilling the regular job. You know, it's easy to find some experienced treasury people who understand cash positioning and cash accounting and a lot of those daily functions. Let someone else come in and help with that, whether it be from another department where someone can step in, or perhaps you use a temp or a consulting firm to help with that. But let your own staff become the experts of whatever system it is that you choose, so that they know how the system works. They implement, they become the super user, the person who really understands the system.
That's great advice. Eugene, do you have anything that you'd like to add to that?
Yeah, no, I definitely agree. Like with any system implementation, including treasury, you know, you need to have the bandwidth to do it. If you're too busy doing everything else, you just won't be able to do it right. You also have to make sure they have the right budget, so you have the right resources to help you with implementation, whether you need an external consultant, whether you need to, like Tracey mentioned, maybe bring somebody else to backfill to free up the time of the team so they can focus on implementation. The other things that come to mind, you need an internal champion. Right? You need to have the right people, executive level, who would support this project. It shouldn't be like, oh, yeah, Eugene wants to get a treasury system, so we'll let him do what he needs to do, but nobody else cares about. So there needs to be a buy-in at the executive level and make sure that you get the right support, right? And it's not just any executive level. You need to make sure that the business tech team or the IT team is also on board and that they're also involved in the project implementation. And the last thing I'd say, you know, we want to make sure that you have the right scope. I don't know if it's exactly an obstacle, but it could be something that trips people up. They want to get a system to do one thing, where they need to do something different, or they get a system to do something that system's not designed to do. So you want to make sure that you know what you want to get and make sure that the system that you're getting is actually can address that need.
Okay, brilliant. And if
Naomi, just to add and specify for lean teams, there's the part of the technical connectivity which I set aside because it's a one-off. It's usually a burden on the vendor to do, with a bit of a push from the company side with the banks. But like the real success criteria is to let the team get rid of the spreadsheets. And for that, it's not only to streamline the data, it's also to standardize it, to categorize it. And like there's a huge impact of what technique the system used to categorize the data, because we see teams find themselves just manually categorize the transactions, and it just doesn't scale. So for example, what we did and invested a lot in is to not only create some rules and just by that categorize the data. We also think with the ERP, and we added now a AI layer to auto categorize the uncategorized transactions. So that's like the base that on top of that, we can build a lot of useful functionalities and really get rid of the Excels to automate the reporting and the different processes. So that's, I think, the obstacle that needs to be overcome.
Yeah, I think everybody here can relate to not having enough time and making sure that they plan properly when they're doing these types of processes, which takes me into my next question. And Eugene, I'm going to ask you this. Lean teams can't do everything. If they are prioritizing automation, which processes should they be focusing on? Like, where should they get started?
Yeah, I mean, again, that would depend on the company and their specific business drivers or pain points. But I would say focus on the low-hanging fruit. You know, don't try to solve everything all at once. I mean, in a perfect world, yes, you want to make everything perfect, but nothing works out perfectly. So make sure you get some kind of low-hanging fruit benefits that you can at least point to quick wins, right? You want to get a system in place and you want to start realizing the benefits of that system rather than waiting for some time in the future when everything is perfect. So those low-hanging fruits for most teams, right, with have no automation, like cash visibility, right? If you have multiple banks, it's good to not have to log into every single portal. So you want to pull it all into one system. It's, you know, anything that's, again, repetitive and manual. And one of those things is usually cash positioning. Somebody needs to log in every day and import the data into a spreadsheet. And maybe it's not a big deal, but at some point, if you have enough bank accounts and you have to do it over and over again, it's something that could be automated, and it could be automated easily. And it's something that TMS is usually very good at because it sees all the transactions at the bank, right? So get the cash positioning done. The next step I would think is some kind of at least a rudimentary cash flow forecast, at least short term. Longer term forecasts involve a lot of complexities that become more and more challenging because you need to get the data, and that becomes difficult to implement. But at least something on short term where maybe some things are maybe even allows for some manual inputs, but the system can look at and see, recognize some patterns and provide some suggestions, maybe even put some kind of alerts for certain thresholds, just so you have to manually check every single account yourself. Other things are, I mentioned on the requirements of treasury, and if your management, if your CFO wants to see a lot of dashboards, well, that's something that TMS can probably do, and you can probably automate very easily. And other things I can think of that are probably more company specific, if you have a lot of debt, maybe there's some kind of a debt module or debt tracking that helps you track your outstanding balances, maybe do some accruals, remind you when to pay interest, et cetera, et cetera. Foreign exchange could be another big area. Banking information, bank signers, right? If you have a lot of legal entities, it's hard to keep track of. So maybe there's systems that can help you do that. And lastly, another area, and it's not necessarily domain exclusive of TMS, but any kind of cash application. If you have a lot of customers, you have collections coming in, matching incoming payments to your AR balances, it's kind of a tedious and manual. So if the system can do it, that's great.
Okay, that's brilliant. And Tracey, over to you.
Yeah, I think Eugene covered most of them. I think the only one that still stands out to me is maybe cash accounting. It seems like about half the time it's done fully the accounting side or maybe with the EP, but about the other half of the time it's done primarily by treasury, who is at least categorizing the transactions and either creating the entries or maybe throwing some report over the wall to accounting for them to enter. But with the TMS, you can get various stages of automation, from the automatic tagging of the appropriate GL entries to each transaction, to maybe a standard output file that you might use to create entries, to even automatic straight through processing and integration with the ERP for the entries to be automatically uploaded. So there's different levels of automation you can get there, but the key is there's no reason any person should have to go through and do that manual tagging and categorizing and of the transactions. Usually in up to 90 to 95% of transactions in most companies can be automatically categorized and tagged. So it can be a big benefit, not always necessarily directly to Treasury, but certainly to the company overall when you consider the time in both Treasury and accounting.
Especially for lean teams where maybe the same people doing.
That's right.
Yeah. Niv, do you have anything to add to that?
Yeah, I think that if we're talking about lean teams and we need to choose one priority for the team to automate first, then it depends on the type of complexity of the company. Like and both Eugene and Tracey mentioned that before. For a very complex companies with number of banks, entities, currencies, sometimes all together, streamlining everything into one place to have an access to an ongoing cash position, it's really like to turn on the light for the team. And I think that's like the first priority for those companies. For companies that are more or has lower level of liquidity and really need to carefully plan liquidity and manage liquidity, I think that for those companies, the cash forecasting is the focus and the priority. And we also see some companies that just feel out of control, inefficient, and just want to automate the day-to-day processes. And by the way, sometimes it's all together. It's complex companies that need to carefully plan liquidity and want to be more in control and to automate processes. And that's, I guess, the best use cases.
Yep. And then if they're going to be buying these solutions, you know, if companies are investing in the money and in the time of buying a solution, what would you say? And I think, Tracey, I'm going to start with you here. What are the essential features to look for, especially if you're a lean team and you don't have, you know, infinite time and resources to get going?
I always recommend that companies start, number one, with their requirements. So if you know what you need, then that's determining then what you look for in the system. Some of the functionality I think you'll find is somewhat similar among tools within certain categories. We tend to categorize them by cash tools, TMS Lite, and Treasury and risk management systems. But I think you won't always find the way they go about doing things the same. And so if you're especially lean, you're really looking for a system that is very intuitive and easy to use and designed in such a way that it is quick to set up, quick to actually start getting value from the system. Earlier, Niv mentioned that Panax uses, you know, some AI around categorizing. So looking for things that are going to help speed up the time to value is important. And so kind of focusing on what is it going to take for me to be able to use this system on a daily basis, to be able to train new users. And once again, it being very intuitive makes a difference. So the leaner the team, the more you need the system to be easy to use. Now, I say that with a little bit of a caveat, which is that if your needs are very heavy, if your requirements cover a large area, then the systems that are able to cover debt, investment, foreign exchange, hedging, lots of other things, they're more complex and the setup just doesn't begin, it doesn't even compare what it takes to set up a really complex system versus one that's a little bit simpler and more focused on cash. So it's important to meet and marry the system with your requirements, not to get too much functionality and not to get too little.
Okay, brilliant. Thank you. Eugene, over to you.
Yeah, well, I think Tracey said it pretty well. I definitely agree with the ease of use, right? If you have a system that very few people can use or cannot use easily, they're just not going to end up using a lot of functionalities within the system. You hear a lot of stories like, yeah, we've implemented the system and we use like 5% of its capabilities. Yeah. Like, well, was it really the right system to implement, or did you implement it well if you have such low utilization? Another thing I'd say for lean team specifically, when taking the plunge of implementing a new system, I think it's the ease of implementation probably is just paramount. I mean, again, I hear stories where, somebody goes after a great system, very robust, the thing is going to get them everything they need. And the implementation is so complex to get through a few modules. And then that's where, things stop. And then for the foreseeable future, they, again, end up with very low utilization. So lean teams, especially, you need to have a system that's easy to implement. And, all of this has to be balanced with the scope. Again, like Tracey said, what do you want to get out of the system, right? It needs to be the right scope. And as I mentioned earlier, the scope that you want needs to also match what the system does. So you just select the right system for the right scope and make sure that's easy enough to implement so you can start getting quick wins.
Okay, perfect. Niv, do you have anything that you'd like to add to that?
Well, yeah, I think that for lean teams, especially when we talk about lean teams, it's all about doing more with less. And then it's not only to automate the initial process and streamline the data, it's also about how can I get the insight in a push to me, because I want to improve my control and decision making. So I need the insights to be generated and pushed to me. So it's about different proactive alerts. So you can spot on excess cash, or whenever you're shorting cash and you need to balance the accounts. It's around the risk management policies that you have in place and you have to enforce, and you want to know whenever you're breaching it. Liquidity policies to make sure you're cash efficient. And also insights around collections or payments, fraud, anomalies. So different types of indications that you want to get in a push mode. I think that's important as well.
Okay, brilliant. And Niv, you mentioned before the importance of forecasting for lean teams. And right now, obviously, there's a lot of economic uncertainty for a lot of companies, a lot of things changing. If we look at like the last 6 years, and we threw a global pandemic in and many other things going on around the world that can cause difficulties for finance teams. Eugene, I'm going to start with you on this one. What techniques would you recommend to help improve forecasting accuracy for companies who are dealing with all this uncertainty?
Yeah, I mean, there are a lot of different techniques and a lot of very specific things, again, depending on individual circumstances, but I'll try to keep it kind of brief and high level and focus on two areas. One is, understanding, first of all, no matter the forecast, I always say, no, the only thing we know about the forecast is it's wrong, right? So you will miss things. That's inevitable. Hopefully you don't miss them that much. But when you miss things, it's important to kind of understand why the forecast was off, right? So it's an iterative process. You're going to do it over and over again. Understanding why the forecast was off. Is it because of the inputs or because of the logic, right? And those are two very different drivers. And the remedy for each one is very different. So understand what's driving the misses in the forecast and how it can be improved. Another part of it is also focusing on understanding the drivers and focus on the right drivers, right? For example, if you step back and think about cash flow forecasting, well, what is really cash flow forecasting, right? It's really a timing difference between P&L and cash, right? There's certain things that happen on P&L, but because of the timing differences, the translation to cash, either it turns to cash sooner or later. You need to understand what are the business drivers that affect the timing between your P&L and cash. And when you do that, right, you don't want to necessarily spend your time spinning wheels on every single little detail. Do the 80-20 rule. Pick up the most important things that really make the difference. Focus on those. If you're a lean team, you're never going to get everything anyways. So focus on what matters.
Okay, brilliant. And Tracey, over to you. How can we How can we become more accurate on our forecasting? Can we become more accurate on our forecasting?
So I think a couple things come into play. First, you definitely have to know your actuals. Without being able to compare the forecast that you had to how you actually did, it's really hard to improve. Not just overall, but how did you do maybe by some categories? And you might start off with some fairly big categories, but most companies, you know, the biggest categories are AR, AP. So if you focus on just those to start with, how can you improve them? Sometimes improving them has to do with the nature of your business. Are you in high growth, or are you a more mature company that is more repetitive? For many companies, literally just looking at the past is a good indication of how they'll do in the future. But for many others, that doesn't, the past is absolutely no idea or representative of how the future is going to look. So if your past is not representative of the future, then you might need to get closer to some of the values that are going to impact your future. So connecting with the ERP, maybe for AR and AP, to have a better view of at least what's going to happen in the short term. So getting closer to the invoices that have been issued, or the invoices that are being entered that are going to need to be paid, might give you a better view on those areas. And the other thing is just to keep in mind the nature of your company, and are you cash rich or cash poor or somewhere in the middle? As you lean toward cash poor, accuracy becomes more and more important. So it might be that you're looking to become accurate within shorter windows, maybe within week periods, so that you can borrow on your revolver with advance notice instead of doing so many prime borrowings or swing line borrowings at the last minute. If you're cash rich, well, maybe you're just looking to invest longer, or maybe for longer maturities. So accuracy isn't nearly as important, and you can just try to be within a certain range. So I think it's really about being realistic to what your company requires, and then using the methods for the time periods that you need to be accurate.
That's brilliant. I'm also taking notes myself. This is this is wonderful. Thank you, guys. And Niv, I'm going to ask you a new question about something that I know you're a big fan of, about metrics. And I'm going to ask you, what metrics should lean finance teams be focusing on if they want to make sure that they have healthy cash flow?
Yeah, well, in my opinion, for companies that really wants to manage liquidity and cash flow hands-on, I think that defining healthy and efficient buffers to be kept in my different pockets is crucial, and then to track that. So you want to have enough buffers to eliminate any operational risk on one hand, but on the other hand, you also want to make sure you optimize the liquidity and that you're cash efficient. So you can track that with the KPI of comparing the percentage of buffer out of the lower point you got to in your account. It can be understood with looking backward in your trend and cash cycles inside your the month. So I think that's a crucial one. And also I think working capital indicators, it's also connected to the forecast part, because you need to track the working capital cycle. You need to see and to track overdues on one hand in collection, and on the other hand to see the payment routines that you're not paying too early, and also to take that into the forecast. Like when you project liquidity, you also need to use the most relevant data you have. So for example, if you have like a payment terms of net 60 that you provide your customers with, but you always collect 2 weeks late, you might want to reflect that on the forecast. Otherwise, the accuracy will dramatically decrease, and you expose yourself to the risk of being in a liquidity issue. Aside of that, I think companies that manage investment creating some kind of a KPI to make sure you always invest more than X%. And also in terms of FX exposures, like it's an indicator, an important indicator. You don't necessarily need to hedge, but at least to be aware of the drivers and the risks can be very effective.
Okay, brilliant. And Tracey, I'm going to pass this over to you.
I definitely like and agree with several of that Niv mentioned. You know, the cash conversion cycle is key, and it's one that every company should be keeping track of, whether they're cash rich or cash poor. Beyond that, looking at if you're cash rich, I think looking at idle cash and looking at numbers around your return on investment to make sure that you're not just letting cash kind of be wasted, sitting in bank accounts, sitting in many bank accounts spread across a variety of banks, a variety of currencies, is all too common, especially when companies have lots of money. They tend to be a little lazier about managing it well, and those can be great opportunities for just picking up additional revenue. That might be the additional revenue that you need to pay for the system that you get. If you're, on the other hand, cash poor, then managing cash much more tightly is important. And so paying attention to your leverage ratios, to your cash relative to debt, to are you borrowing at the right times? Is your forecast good enough so that you are borrowing using the cheapest type of debt? Or are you doing a lot of last minute things where you're always utilizing that swing line? So really paying attention to your company's situation and then how cash needs to be managed relative that is really, really important. Once again, for cash poor companies, looking even at burn rate. You know, if at our present rate of usage, how long is our cash going to last? And are there low points that we need to be planning for and thinking about right now? So those are important things to look at.
Okay, brilliant. And I see what actually gets
I'll add one more thing. I totally agree with everything that Tracey and Niv said. I just add one more thing, just a little different way to think about it, right? In the cash conversion cycle, right, the question is that I would want to know, and I don't know how easy it is to see it, but who is actually holding your cash? Is it you holding the cash? Is it your vendor / or customer, so your partner? Or is it a fintech provider? Because a lot of times, you know, with a lot of automation that comes, a lot of fintech companies jump in and become an intermediary. And a lot of times the cash sits at those intermediaries. So whoever holds the cash gets the benefit of basically earning on that cash, right? So if you're holding the cash, that's the most optimal thing from your perspective. If your partner's holding the cash, it's probably less optimal, but at least they're within your ecosystem. And if it's an intermediary holding the cash, to me, that's, you know, if there's a lot of cash being held there, that's almost a red flag for two reasons. One, counterparty risk, because like who's actually, like how safe are they? And second, you know, from the interest income and the return on your cash.
That's a really good point. And I'm going to ask you all for one final tip for the people who are listening here. If you could give one final tip for lean teams with complex treasury in 2025, what would that be? And Niv, I'm going to start with you.
Yeah, so I think if I refer to the more, let's say, complex companies, so Rome wasn't built in a day. And I think that automation is a gradual process that needs to start with streamlining the data and standardizing it. I think that if that's done effectively, from there are many valuable functionalities that can really improve the finance team's day-to-day, reduce risks, improve control, optimize the liquidity. So I think that starting by, again, automating the core and basic processes will bring the value later on.
Okay, brilliant. And Eugene, over to you.
Yeah, I'd say know your priorities, right? I mean, there's so many times that companies get focused on the wrong issue or to solve for the wrong, maybe not wrong, but not the most important thing. And then they let the important things kind of go untended, right? Second, I would say have a process for things, right? If something's important, develop a process. Don't rely on a system to solve your problems, right? System can help, system can automate, system can make things more efficient. But if you don't have a process or process is broken, you're going to automate a broken process, the end result's not going to be any better. And lastly, I'd say keep an eye on risk, because a lot of times, especially lean teams, there's a lot of kind of, people who do treasury, they have a lot of legacy on accounting side, and their priority is more on accounting side, accounting being very deterministic, where things need to be exact, the timing needs to be exact. So there's a lot of focus on the precision, but not a lot of focus on this probabilistic aspect, which is risk. So again, keep an eye on risk, understand what's important, what's the frequency and severity of potential downside, and then make sure you mitigate it if there's something that could be severe.
Brilliant, thank you. And Tracey?
All right, I guess mine would be let's call it two-part. If you're in a finance team without an actually defined treasury function, and it might seem a little bit self-serving, but I would say you still need treasury knowledge, even if you don't have a treasury team. So having someone with that treasury knowledge at least advise you on how to manage cash better is critical. And so you don't have to necessarily invest in having a bespoke treasury team, but you do need to invest in getting some of that cash management expertise. Some of that comes with systems, and best practices are often built into that, but you actually need that even before you implement a system. And second is, if you are a treasury, you have a treasury team, then to treasury teams in 2025, I'd say get closer and closer to the business. Look for opportunities for treasury to provide value to other parts of the business, to get close to the core business that your company is in, to where you really make your money, and don't just kind of keep your being a little bubble and very siloed away from the company. Treasury can provide tremendous value, but you have to go looking for it.
That is brilliant. Thank you very much to all three of our speakers. I've just been told that our Q&A button has not been working. So I'd just like to apologize to everyone who would like to ask a question. We'll be sending the recording out afterwards. And if you have a question, you can ask it, and I will make sure that it gets through to our experts, and we will answer it over email instead of answering it here. Tracey and Eugene and Niv, I'd like to thank you very much for your time and your insights and for sharing all your knowledge. And thank you very much to everybody who joined us today, and have a great rest of day.
Thank you.
Thank you very much.
Thank you, guys.
Bye.
Thanks. Bye-bye.